Welcome to the training session on how an income-generating business should work. This training module is probably the most important out of all the training sessions, as this provides a global overview on how to view and run your business. To start off with, we are going to discuss the basic parts that a business is made up of. Every business is made up of four basic parts called assets, liabilities, income and expenses. Assets are the parts that a business owns. You might want to pause this session at this stage to write down what your business owns. Note that when you enter the assets, that you clearly differentiate between what you own personally and what is owned by the business. Only enter the assets that are owned by the business. Liabilities are the items that a business owes to others. For example, if you have borrowed some money for your business, that is a liability. You may also have some outstanding unpaid bills. For example, a business electricity bill that you've not paid yet. Please enter this into the liability section. Please do not confuse your personal debts with that of the business. When you subtract the liabilities from the assets, you end up with the net value of the business. That is the value you would end up getting if you sold your business and then repaid all monies owing by the business. The set of accounts showing the assets and liabilities and net value of the business are usually called the balance sheet or statement of financial position. The next part that a business is made up of is the income section. Income is the money that a business receives from either selling its goods or services. Please make up a list of goods or services that your existing or proposed business may sell. The expenses section is the last part of a business. Expenses are all the payments that your business has to make in order to run as an enterprise. Again, please make up a list of all the expenses that your business may incur. Please ensure that you have only included expenses incurred by your business, not your own personal expenses. At this stage, you may wish to have a discussion on what are business and what are personal expenses. When you subtract the business expenses from the business income, you end up with the business's profit. A set of accounts showing the income, expenses and profit of the business are usually called the profit and loss statement or the statement of financial performance. This concludes the first part of this training session. I hope that so far everyone has understood the basics mentioned. If not, please repeat the session from the beginning and discuss it before proceeding to the next part. We are now coming to the most important part. The business should be treated as a separate entity to the business owner. That is, you need to be able to separate your personal needs from that of the business. You can probably do this best if you imagine the business to be another person. Failure for people to be able to do this is probably the single largest reason as to why their businesses fail or fail to grow. If you truly do this in your mind, then you start asking yourself what the business wants rather than what you want. Can anyone tell me what is the most important part that a business wants? If you remember, each business is made up of assets, liabilities that give you the net value of the business, and income and expenses which give you the business's profits. What is the most important? Is it the assets, the liabilities, the net value of the business, the income, the expenses, or the profits? Please discuss this among yourself. The part that is the most important part to the business is actually the net value of the business. That is, your business wants to be rich. It doesn't want to be a little corner store. It wants to be a supermarket. It doesn't want to be 1 or 2 cows. It wants to be a cattle empire. Note that I'm not discussing what you personally want, but rather what the business wants. The usual way that most businesses become rich is by having a good profit. Hence, having a good profit is the second most important part of a business. If you truly have separated the business from your personal needs, you will also realize some of the following. The business also wants to have its own money so that it can grow. Hence, you will need a separate bank account for the business. Alternatively, you need to have 2 pockets for the money. 1 pocket for yourself and 1 for the business. Do not mix up the business's money with your own. It will lead to the destruction of the business and hence the destruction of your own future. Whenever you draw money from the business for yourself, you have become an expense to the business. Can you see that there is a direct conflict between you and the business? You need money to live on, and yet the business needs to remain profitable so that it can grow. Hence, the business needs to make enough money so that it has its own profits. It also needs to be able to meet its debts and expenses, and also provide an adequate income to the business owner. If it can't do all of these 3 things, then you might as well not start the business. Note that if you want to start a business, you need to make sure that you have the necessary skills to run the business. The business also needs to be free from corruption. It needs to be fair to everyone and should not be disreputable. Ask yourself if this business is pleasing to God. All of the items mentioned need to be taken into account when starting or running an existing business. One way of testing whether your enterprise is viable is to create a business model of your business. We have a separate training session on this showing you how to do this. This concludes the training session on how an income-generating business should work.